Hi guys, super excited to bring you to this first video on the series I'll be doing on how I trade the smart money concept based on my experience and knowledge. Guys, in this video I'll be teaching you what are order blocks, how to identify them, and how to have in-depth knowledge about what order blocks. Without any further ado, if you would like this content and like to know more about what smart money concept, to learn it from me and my understanding, stick to the end of this video. Don't forget to subscribe to my channel, turn on post notification so that you can get notified when I post new video on this series. So guys, I'm here to say this YouTube stuff. I'm not a financial advisor. I am just here to share my knowledge with you and my experience based on what trading and smart money concept. Without any further ado, I'm going to let the intro roll in. See you as soon as possible. Welcome back, traders. Like I said in the intro, that I'm going to teach you guys order blocks, everything, how to spot them and how to understand them very, very well. Now guys, first of all, I'm going to let you guys know what order blocks are. Order blocks, they are areas where institutions and banks, hedge funds, the bigger boys in the forex market are willing to do buy or sell from. We have two types of order blocks, like you can see on my screen. I have the bullish order block, I have the bearish order block, and I have the third one below. I don't know the name I will give to this, but this is also a scenario of order block. So guys, before I say anything, I want to correct this statement the other traders outside there say. Like they say, the smart money concept traders out there, what they say they trade like the banks. Guys, let me correct that statement. No one trade like the banks. Like, no retail traders trade like the banks. The right statement is you trade the footprint of the banks. That's what we, the smart money traders, are doing. We are trading the footprints the banks left behind. You get the point? That is what smart money concept is all about, and I'm here to share my own knowledge to you guys, so you can grab it and use it in your trading arsenal. If it is something you want to add, just sit down and watch this video. You're gonna grab a lot. So guys, like you can see in the first session here, the bullish order block, the short form is OB. Now guys, before these banks or institution do anything in the market, when they come into the market, I don't want to trade the financial market, there are certain things they do that if you don't understand it as a smart money concept, you'll be trapped in. Now you can see in the bullish on OB, the market was actually doing what? Please, this is a diagrammatic representation of how it looks like on the chart. It is different from the way I drew it right here on the chart. It's not going to be that so clean like this, but with this pictorial representation, you're going to get it into your head that when you see it in the main chart, you can observe, you can identify it. So you can see the market here is actually making lower lows and lower highs, lower lows and lower highs. And like the saying in the smart money concept, if you cannot identify liquidity, then you are the liquidity. Your number one job as a smart money concept trader is to know how to identify liquidity. We're going to do that in the next video that I'm going to upload. Everything it takes stage by stage, but at this point we'll be doing what we call order block. Now, for every highs and lows in the trending market or consolidation market, there's liquidity. Now when this smart money the banks, when they come into the market to trade, what they do first is to stop us out, you and I that are the retail traders, to stop us out before they can make any move. Now when they stop you and I out, what we call that is liquidity grab. What do I mean by that? When they stop us out, most of retail traders, those that trade the support and resistance, when they are trying to sell from the resistance, they put their stop loss above. When they're trying to buy from support, they put their stop loss below. Now this institution will first of all take out the retail traders money before they can make any move, either buy or sell. But in this case, they are trying to do what? Buy the market, and the market is currently what? Downtrend. What they do is what? They first of all take out those that are willing to do what? To sell in order to continue what? The lower lows and lower high. You can see here, so let me bring my arrow to a minute. You can see here that they took out those that are trying to do what? To sell. Those retailers that are trying to sell the breakout of this what? Previous low. They took them out, and they do what? They took those that are also willing to do what? To sell from what? This resistance. That is what, when you see this first sign, you should know that the only people that can cause this are the institutions. When they take out the sell side people and the buy side people, what they do, these banks, they don't use stop loss the way you and I use. They are bigger boys in the market. They trade with bigger money. When they do this first movement, what they do, that they are already open what? Sell position that is in loss, they will do what? They will bring back price in order to do what? To close or break even that they are what? They are already open what? Position. In the smart money concept terminology, we call it mitigate. They will come back here, like they sold here, like you can see, follow my arrow, they sold here, and they bought from here, and they have already what? Open what? Trade that is on loss. No one is here to lose the market. Even the banks are not here to lose in the market. Oh, we want to gain profit, but there are losses in the market. What they do, they now bring back price to that place they opened what? Their sell position. They bring back price back there in order to do what? To close that position that is in loss. Maybe they might go out of the market with small loss or what? Break even, in order to do what? To make an impulse move to the upside. The only people that can cause this move are the banks. When you see this thing, guys, when you see it in the chart, just know the banks have done what? Their movement. That is what is the footprint of the banks, and that place that create that footprint is the what called the order block. This is the area, like I said from the beginning, this is an area the banks are willing to sell or buy from. That place that caused that final impulse move to the upside is the order block. So I move to the next one, which is the bearish order block, which you can see here on my screen. The same concept that applies to the bullish is the same concept that applies to the bearish. The market was actually trending upwards. Retail traders, you and I, are doing what? Buying the market. But when the banks want to trade, they want to move this market down. What did they do first? They first of all open a buy position. I think I should use my brush here. They open a buy position here. When they open a buy position, people are happy, they're in profit, and all of a sudden they bring the market down to stop them out. When they stop them out, they already have an open position that is already on loss. What the banks do is what? They bring back price to that place. They bought from. Here is it. To that place they bought from. They bring back price to that place they bought from, and that place they bought from, there is a last candle. That area is known as the order block, in order for them to push price downwards. That's just it about order block. We're gonna identify this on the chart. I'm gonna show you guys on the chart. I just want you guys to get the concept. Before the banks do anything, they first of all take out the retail traders before they can make any movement. So you need to understand liquidity. When you see liquidity and you know how to identify liquidity, you're good to go. So guys, the third scenario here, sorry about that. The third scenario here will be what? I don't know why this thing is always like this. Sorry, I don't know. Okay, I think I'm good to go. So the third scenario here is the what? This scenario, the consolidation what? Market. You can see here on my screen, guys, this market is actually what? Consolidating, and some retail traders definitely they told us then when I was trading that method that we do what? We sell at resistance and what? Buy and support. I am not saying that it doesn't work. It works. I'm just trying to let you know that this is a strategy and the concept I trade right now. Sorry about that. So like I said from the beginning, liquidity sits at highs and lows of every trending market and what? A consolidating market. This dollar sign here, it represents my liquidity sign, which is the money. Liquidity means money. What the market, what did when the institution do in this market? They first of all take out this word, those that are willing to do what? To buy from this support. They took them out because when they place their order from this support, they will put their stop loss below their stop support. Definitely, you can see what the banks did. They took out those retail traders. They took them out. You understand? Right? Okay, let me start from here. Those that are willing to do what? To sell from this resistance. They took them out, and what? Some of them were happy, like they're in profit, and all of a sudden, the institution brought back the market down in order to stop those that are trying to sell from the breakout or what to buy from the support, in order for them to make that impulsive move to the upside. And when that is done, that area that caused that impulsive move is what we call the order block. And you can see it is marked in my chart, which represent the OB. The banks brings back their position in order for them to do mitigate or close that their loss position in order to carry the market to the upside. That's that for order block. If you can get this concept and understand what these banks are doing in the chart, you're good to go. So guys, let me take you to the chart where you can see what I just explained to you guys in details. So I'll be going to EURUSD a minute. Yeah, I already marked that out. Sorry, a minute. Oh shit, I think I marked this out. Oh, that's wiped up. A minute, guys. Sorry, I'm looking for where I marked it. It's not here. Oh my goodness. Okay guys, this is an example of the bearish order block I showed it to you guys on the chart when I was explaining. You can see this is the chart on EURUSD. The same concept I showed you guys is the same thing that is happening in this chart here. That diagram I showed you guys is the same thing that is happening here. When you're able to understand this, you will get this thing right. You can see here the market was actually trending up a little. This is the daily time frame, so it's a little trending up. You understand what the banks came into the market to do? What? To create this, to take out this buy side liquidity. You can see here, this my good sign shows liquidity for me. It took them out and do what? Break structure. It broke that structure, which the first sign of that, some people call it the coach, but me, I use it as break of structure. When the market breaks the first structure and is failing to make another high, then that shows that the market is about to what, go down. Now you can see when they broke the structure, they came back to this order block. There is an order block sitting right here. Sorry, I didn't mark that. There's an order block sitting right here. This week, with time, you guys will understand more details about this. I'm going to share everything with you guys. So there's this, or this side is an order block. You can see when the market came back there, what did the market do? The market fell. The market did what? Fell to the downside. And all of a sudden, it broke another structure here. And what did the market do? It went back. The banks went back to do what? To mitigate their already lost position in order to close it in loss, in a break even or on a small loss. And what happened? The market what? Fell again. That same thing all over again. It keeps repeating itself. In this place, the same thing happened again. The market what? Took out this liquidity here, and what? Broke structure. This is an order block with a clear what? Imbalance. What just happened? The banks, they broke back the market to that order block in order to be filled, and did what? Make the market to fall. Guys, this same thing is happening every day, every time. If you were able to see this thing and spot it, you are good to go. So I'll be taking you guys to the next example that shows the bullish order block, to the bullish order block. So let's go there. And guys, it works in every time frame. I just showed you the daily time frame. I'm here to show you the 4-hour time frame. It works for every time frame. You can see here on my screen, this is for the example of the bullish order block. You can see what happened right now. The same concept. The banks, first of all, took out liquidity. They took out those that are willing to do what? To sell this market from the breakout, or do what? To sell the market, or buy the resistance. You can see they buy the support rather. You can see the banks, they first of all took out the liquidity here and did what? Broke structure. Came back to mitigate that order block in order to push the market higher. And you can see the market has been doing coming back to mitigate this order block and moving up to the upside. So guys, this is that for order block. Like I repeat myself, order blocks are areas where the banks are willing to buy or sell from. If it is for the bullish, let me go back to that my example. If it's for the bullish order block, sorry, seconds. What's wrong? Okay, that was it. Minutes. Alright, like I said, you can see on my screen again. Yeah, the last for this bearish order block, what you should be looking for, if already you understand the footprint, they first of all take out liquidity. And if they are trying to sell the market, since the market is uptrend, they first of all take out the buy side liquidity and stop those that are willing to sell the breakout, and do what? They return back to the order block. And that order block is that last for the bearish OB, is that last bullish candle that led to the break of structure. So you can see on my screen here, you can see I drew some candles out, examples. So you see the last bullish candle in order for the market. It is that last bullish candle for the bearish order block that is the order block. For the bullish order block, it is the last bearish candle in order for the market to do to go upwards. You can see it here. So guys, that is that for order block. When you go over this video and watch it again, and also I'll be creating a PDF where you can also have a blueprint of everything in order for you to go over it to get more in-depth knowledge about it. So guys, I have a Telegram group. I just created a free Telegram group. Created. If you want to be part of the Telegram group where I share my daily day in, day out buyers about chat about different trades setup I take. So I'm not sending any signal, I'm not doing anything, it's just my trade ideas on every pair I trade. So if you're willing to join that group, just click the link below of this under this video, then you'll be heads up into the to the Telegram channel. Please don't forget to subscribe to my channel. Don't forget to like this video in order for YouTube to recommend it to those that are willing to understand more about the smart money concept. If you don't have those money they pay to those bigger boys, those other channels that, and those bigger smart money concept guy that plays that cost on £1,000, dollars, or everything. But when you subscribe to this channel, you get everything in details. So guys, see you in the next episode and remain blessed.